So general liability covers you and your company in the case that you cause third-party damage or bodily injury, whether that's property damage or bodily injury to a third party. The way that it's rated is typically off of either payroll or sales. It just depends on which carrier, which insurance company you're actually working with. And the way that it's calculated is it's estimated at the beginning of the policy and then trued up and audited at the end. So it's just like doing your taxes. At the beginning of the year, you're estimating how much you're going to make. At the end of the year, you have to true up based off of that. And if you've underestimated, you might owe a little bit. If you've overestimated, then you might get a little money back. So the audit process is usually pretty simple. Even though the word audit sounds big and scary, it really isn't. All the insurance company is looking for is either your tax reports or payroll reports. They may ask you for your 941s, your quarterly payroll reports. And really what they're looking to do is to match up that payroll with the estimate that you originally used in order to determine what your general liability dollar amount of premium should be that you paid into the policy. So it's pretty much your payroll or your sales multiplied by a rate equals the premium. It's that simple. One of the things to know is that you can underestimate from a cash flow standpoint. You can be a little more conservative on that estimate. But if you do choose to go that route, then you're going to have to true it up at the end of the policy, and you may owe a little bit more. But it's going to help with cash flow. So especially in the beginning as a startup company, if you're just getting started, we usually recommend that people use approximately $30,000 per employee. Full-time employee is a good estimate. Most of our clients come in right around that dollar amount if you've got part-time guys that you're bringing in addition to the owner. Typically with general liability, the owner gets capped, so it doesn't matter how much you pay yourself. You're going to be capped at a certain dollar amount and not charge more than that when it comes to the general liability. Workers' comp is a little bit different. We'll talk about that later. Minimum premiums typically apply. There can be different additional charges when it comes to general liability. If a company asks to be named as additional insured on your general liability policy, or if they ask for a primary non-contributory language, or even waiver of subrogation. Those are all typical requests that we see with regards to the general liability, and those endorsements can have surcharges. For us in the junk removal industry, knowing that these requests are typical, we automatically bundle all of those different endorsements and include them, so you're not being surcharged or nickel and dimed for every single request. So waiver of subrogation just means you're waiving your insurance company's right to go back after a responsible party in the case of a claim. Additional insured means that you're adding the property manager or the storage unit or the company as an additional insured onto your policy. So those are changing the policy. Primary non-contributory just says that your policy is going to step up and be primary in the case of a claim. And even if there's contributory negligence, the other parties' policies are not going to pay out. Yours is going to pay out. So when someone asks you for these endorsements, this is effectively what they're doing is they're transferring their risk onto you and your policy. And that's okay to do that. Certainly, we come across that request very often, but you just have to know as a business owner effectively that that's what you're doing. You're transferring your risk over to for your insurance company over to a property or another company. One of the things that we've also come across with regards to general liability are multiple different classifications. So a lot of brokers across the country don't really know what to call junk removal insurance. So when we first started in 2015, we saw all different kinds of classifications. We saw people being called truckers. We saw people being called garbage, garbage, ash, and refuse collection. We saw debris removal. We saw construction. We saw all different kinds. Now, having done this for the last 7 years, we know that the correct classification when it comes to general liability is typically debris removal or garbage removal. Now, we will on occasion see janitorial, but really it's whatever the underwriter feels comfortable calling what we're doing. With us specifically, we're more often using the debris removal classification, but it really does depend on the carrier. And as long as the underwriter is comfortable with the overall exposure and they know and understand what you're actually out there doing, then it's okay to call it whatever, as long as the insurance company realizes what they're actually insuring.